So, CFD trading and trading stocks are two different ways to get involved in the financial market. Both of them have their unique features, objective merits and drawbacks, which often makes it more complicated for the newcomers to opt for one of them. So in this video, we will explore the main differences between CFD trading versus share trading, letting you make the right choice and benefit from the increased gross profit. So to find out the difference between a CFD trading and a stock trading, let's look into their distinctive characteristics. So CFD trading is a form of a derivative trading that has soared in popularity during the last decade. It allows investors to speculate on the price movement of the financial products between the open and closing trades. CFD product ranges includes shares, major stock indices, commodities. You can implement CFDs when trading Forex, foreign exchange, crypto, etc. CFD distinctive features can be revealed through the following 5 properties. So first one is ownership. CFD investors never own the asset itself. They get the profit due to the fluctuations in the asset price. It means that CFD retail traders don't need to buy or sell physical gold. For instance, they just speculate on its market's price change. Leverage. When the investors trade CFDs with leveraged retail investors accounts, they have a much smaller capital outlay since they deposit only a small amount of the total trade value to open the leveraged position in the CFD market. However, both profits and losses are calculated using the full value of the product. Therefore, when dealing with the CFDs, speculators have to face the high risk of losing money rapidly and going long and going short. CFD allows investors to benefit from both rising prices and falling prices as well. Next point is markets. CFD trading comes with an opportunity to trade on more than 15,000 markets with around-the-clock access. Then we have taxes. CFDs don't require stamp duty. However, it's necessary to pay capital gains tax. Stock trading, also known as the share dealing, is one of the most common and easy ways to dive into the financial market. It implies buying some stocks of a public company that you believe will perform well in a long-term projection. So let's consider investing in terms of properties used to describe the CFD peculiarities. First one, ownership. So when investing in stocks, in contrast to CFD trading, an investor is a total owner of the asset and may possess some shareholder privileges. As for the leverage, an investor has to pay the full value of the financial product. Yet it offers not so high risk of losing money since the losses can't exceed the cost of the total investment. So, going long and going short. And share dealing can generate income only in case the asset's price is rising. Next point is markets. Investing allows you only to buy shares and ETFs, which are exchange-traded funds. And as for the taxes, both stamp duty and capital gains tax have to be paid when doing stock trading. And so, a CFD trader wants to buy 1,000 stocks of a fictional company, AAA, with a purchase price of $14 per share, for example. It means that the price for this financial product will be $14,000, which, because we have 1,000 times 40. CFD on shares trading, stock CFD traders don't need to pay $14,000. They use the leverage 1 to 20 and usually pay only 5% margin. Thus, in our example, 1,000 times $40 times 5% equals $2,000. The rest of the sum is lent by the CFD broker. So there are 2 ways how a stock CFD trader can operate. In case he thinks the company will do well in the market, he opens the long CFD trade and profits if the price for this product rises. For example, if the price at closing is $45, the profit will be 45 minus 40 times 1,000 shares, which equals $5,000. So if the opposite situation, when the investor predicted the fall of the price, he opens a short position and benefits if the prediction comes true. In this example, it's important to remember, the investor doesn't own the asset. Although the investor pays only the margin, both profits and losses are calculated from the full value of the product. Share investing. In contrast to CFD trading, share dealing implies that the investor must commit the total value of the position, in our case, $40,000. Here it's important to underline. Investors can only profit from rising prices, opening long position. In this example, if the price at closing is 45, the profit will be the same as with the CFD deal. So we have $45,000 minus $40,000 equals $5,000. So investors get the ownership of the product, which may allow them to receive dividends, have voting rights, and benefit from other shareholder privileges. The highest market risk is limited to the investment amount. In the AAA example, it means that the investor can't be losing money rapidly and that this risk is limited to $40,000. To help you decide what to opt for, traditional investing or CFD trading, let's sum up the main advantages and disadvantages. So as for the advantages of CFD trading, high leverage opportunities. One of the main benefits of CFD trading is that it ensures higher leverage in comparison to traditional trading. Nowadays, the margin is capped in a range from 2% to 50%, offering a leverage from 50 to 1 to 1 to 1 consecutively. Then we have global market access. CFD authorized financial services providers offer investors around-the-clock access to a great variety of markets. No shorting restrictions. Since a CFD investor doesn't own the underlying asset, CFD instruments can be shortened at any time, and so a vast variety of trading opportunities. Trading platforms offer Forex, stock, indices, gold, commodities, crypto contracts for difference, etc., letting investors gain diverse trading experience in contrast to exchanges. So, no day trading rules. Some markets come with a certain limit on the number of day trades or minimal amounts of capital for a day trade. CFD markets don't set any of these requirements. There is no stamp duty, and unlike the investing, CFD speculators don't need to pay this tax. Then, lower cost. CFD trading tends to be more cost effective not only due to the absence of a stamp duty but also due to the lower online broker and trading platform fees in contrast to traditional share of or Forex brokers. So we have next one, sell and buy positions. CFD traders have an opportunity to earn in both falling and rising markets. But now we need to go to the disadvantages of trading CFDs. First one is significant risk. Leverage is a double-edged sword. On the one hand, it increases the potential profits, but on the other hand, magnifies the losses. Moreover, CFDs are complex instruments that represent a fast-moving and fast-developing type of trading. Thus, it requires continuous monitoring and a well-considered investment strategy not to face the loss. Moreover, if you don't have enough experience, it's recommended to seek independent advice from professionals. Otherwise, there is a high risk that you can make retail investor accounts lose money when CFDs trading. Then you don't have shareholder rights. As CFD traders don't own the underlying assets, they don't possess shareholder privileges such as voting rights in the company. Weak regulation. The CFD sphere lacks regulation. Although there are many credible CFD online brokers, before checking if you can trade CFDs with this provider, it's necessary to examine their background. Moreover, it's crucial to check the local law system as CFDs may not be legal in some countries. For example, being over-the-counter OTC products, they are forbidden in the USA, for example. Next one, we have spread. So CFD traders have to pay the spread, which is the price difference between buy and sell prices. Thus, if traditional markets slightly reduce investors' profits by introducing a vast range of fees, commissions, regulations, etc., CFD markets do that through the spread. However, some traders do spread betting with CFDs, which is a type of speculative financial betting in which individuals bet on the price movement. And so guys, I think we summarized all of the key features and key components of the disadvantages and advantages as for the CFD trading and investing in real stocks. So with that note, I will end this video. Of course, if you like this one, leave a like, subscription under this video, under this channel. If you have some suggestions or some questions, leave a comment down below. And then, yeah, thank you again for watching, and I'll see you in the next video. Take care and goodbye.